The United Kingdom is fighting an economic storm, and this is something that every investor should be paying attention to. I'll show you. First, in the United Kingdom, inflation is still above 6%. Second, unemployment has been steadily rising month over month. And third, economic growth has been slowing. To put it in perspective, in the UK, food inflation between August of 2022 and August of 2023 was over 13%. This naturally has led to a lot of workers being unhappy with the pay that they're getting. Take a listen.
Doctors walking out to demand higher pay. The UK has been gripped by strikes since last year. Rampant inflation, which has triggered a cost of living crisis, is at its core.
They've offered us a paltry sum of 8%, which is sub-inflationary this year, although they've tried to disingenuously disguise it as a pay rise, but it's not.
Notice what he said. Doctors are on strike because they're not making enough money, and even when they were offered a pay raise of 8%, that's not a real pay raise because the cost of things like food are growing faster than that 8%. So you have workers that feel like they aren't making enough money, and then on the flip side, you're starting to see the economy contract faster than expected in the UK. On September 13th, the latest UK economic data report came out saying that the UK economy contracted by faster than expected in the earlier part of 2023. This is what some people like to call the triangle of doom. I don't know why it has such a scary name, but what it's saying now is you have high inflation that is still hot. You have an economy that isn't growing as fast as it was, making it harder for businesses to make more money. And then you have wages that aren't keeping up. But at the same time, wages are still rising. I mean, an 8% pay raise is pretty high, but it's not enough to keep up with the higher cost of living, which is starting to create this wage price spiral, because now if you have to keep paying people more in order to survive, that means you also need to make more money in order to survive as a business. So you can start to see why this is a problem. Not to mention the fact that the unemployment is slowly trickling upwards and the number of job openings in the UK are slowly trickling downwards month over month. So what's causing this change in the economy? Well, one of the factors is the sharp rise in interest rates in the UK. This is a chart showing interest rates in the United Kingdom over the last 10 years, and you can see how aggressively interest rates have risen relative to where interest rates have been over the last decade. And then I guess I should mention the little cherry on top, which is that the UK, along with many other countries in Europe, are still facing the effects of the energy crisis because they've been so dependent on Russian energy, which has been turned off ever since Russia attacked Ukraine. All these economic concerns have naturally brought on fears of stagflation potentially coming to the UK. Now, this is a topic that we've been covering in Market Briefs. Market Briefs is my free financial newsletter where every day my team is working to break down what's happening in things like the global economy, our economy in the United States, the housing market, the stock market, and crypto. It's a fun, witty, and easy to read email. You can read it in less than 5 minutes every morning, and it's completely free. So if you have not joined Market Briefs yet, I got the link to how you can join down in the description below, or you can go to briefs.co/market. Now, what is stagflation? Stagflation is when you see three things happening at the same time. You see high and potentially rising inflation, you're seeing a slowing economy, and you're seeing high and potentially rising unemployment. So three negative things happening at the exact same time. Now, the reason why this is significant for you to understand, even if you're not in the United Kingdom, is because, well, number one, this could potentially give you some indication of what could potentially happen in the United States, because the UK, like the US, dealt with high money printing, high interest rates, and now they're facing the impacts of that. And secondly, because the UK is a major world economy, and what's happening in the UK could have implications or some spillover effect into the United States. And plus, it's good for you to be financially educated to understand how money plays a part in different parts of the world because, well, the same factors happen again and again and again, not just in one country, but around the world. So, talking about this concept of stagflation. The UK, along with the United States, have been seeing high inflation for a while, and what a lot of countries are realizing now, towards the end of 2023, is that bringing inflation down and keeping it down is a little bit more difficult than originally thought. Big surprise. Now, what causes inflation? Well, inflation really has one root cause, and the root cause is ultimately money printing. The UK, like the United States, printed a lot of stimulus money in 2020 and 2021, and that created a big flood of money into the economy. It created a big boost to the economy, but there's an impact to that. I mean, it created all this demand because businesses and people had the ability to buy things, and there wasn't enough supply, which then caused the prices of things to rise. Now, if your incomes are rising enough to keep up with the higher cost of living, it's no big deal. Because if home prices double and your income also doubles, then it's not that big of a deal because your income grew in correlation to the cost of living. But that's not what we're seeing happen. We're seeing the prices of things food, housing, travel rise faster than people's incomes. Now, the difficult part with this is you have central banks around the world, including the United States, that have been working to raise interest rates to cool down demand, to cool down inflation. The problem with that is central banks are working to cool down inflation. They're not looking for deflation. That means over the last few years, all this high inflation that we've seen is still going to create pain, because you got to think about it. Deflation means inflation starts to cool down. That means the prices of things continue rising. They just don't keep rising as fast as they were before. Well, what about the last few years of run-up in prices? How do you correct that? Well, you're not correcting that, because if your wages grew by this much and the prices of things grew by this much, well, that means there's a gap between wages and the prices of things. Well, now deflation means the prices of things grow less quickly, and if you have disinflation, which is what central banks are looking for, that means you have the prices of things rising less quickly, which also means incomes are rising less quickly. So you have this issue with high inflation that countries around the world are starting to deal with now, because many countries are realizing that bringing inflation down and keeping it down is, number one, more difficult and will take more time than originally thought. But in order to bring this high inflation down, what's being done? Interest rates are rising. Interest rates have risen very quickly in the UK. I mean, they didn't rise much at all over the last decade until, well, just the last couple of years. And because of these higher interest rates, it's causing a cool down in the economy. That's happening in the UK. It's also happening in the United States. Why is this significant? Well, because we haven't fully felt the effects of the higher interest rates yet. It can take 6 to 12 to sometimes 18 months to really feel the impacts of higher interest rates. Well, the United States only started raising interest rates in March of 2022. That means it's been about a year and a half since we started raising interest rates, and we continued raising interest rates into 2023. So the United States still has to feel the impacts of the interest rates in the latter part of 2022 and the 2023 interest rate hikes. The UK is kind of in the same boat. So we've been seeing an effect on the economy with the higher interest rates, but the impacts of the higher interest rates have yet to fully be felt. Not to mention, it seems like interest rates could still potentially go higher from here and stay high for a long time, which could create issues in the economy. Then you have the unemployment issue. And this one's interesting because to a regular person, high unemployment seems like a bad thing because that means people are losing their jobs. However, what central banks are trying to do is they want to soften the job market. They want to soften the labor market. What does that mean? What does that mean to soften the job market? Soften the job market means you have higher unemployment. Now, how could that be a good thing? Well, what the Federal Reserve Bank and what central banks around the world are saying is businesses had too much money. And when you have so much money, you can hire so many people and you can grow so quickly, and people have incomes, well, now you can go out and shop. When everybody has an income, they're going to the Gucci store, they're going to the Louis Vuitton store, they're going to the Lululemon store, and everyone's spending money because everybody has money to spend. But if unemployment starts to go up, the income starts to go away. And if the income starts to go away, people don't still have the ability to spend. And if people lose some of that ability to spend, that means you have less people shopping. If you have less people shopping, that means you have less demand. And if you have less demand, well, then that helps to cool down inflation. But you can start to see why that's a problem. Because if you have higher unemployment, that causes more pain in the economy. And this is that tough problem now that the UK is really starting to deal with. The question is, are we going to see the same thing here in the United States? Is the UK just 6 months ahead of us? Maybe 12 months ahead of us? Or is this something that's going to be completely different than what's happening here in the United States? And so this is what's happening now in the UK, where the UK is starting to see the impacts of the high inflation. They're starting to see a bigger slowdown in their economy and the economic growth. And they're slowly starting to see an upward movement in unemployment. Now, is unemployment super high right now? No. But they're starting to see this upward trend, which is where now their central bank and their government are trying to fight this problem. However, you can start to see why this is a little bit more difficult than originally anticipated for the central banks and the government, which really shouldn't have been that difficult to predict, but apparently it was. Because now, if you start stimulating the economy by cutting interest rates, if you start stimulating the economy by printing money, you make the inflation problem worse. If you continue to fight inflation, you make the economy worse and you make unemployment worse. So this is what's going on in the UK right now. Want to get you up to speed on that, and this is why it's important for you to understand as an investor. That way you can understand that this is why it's smart for you to start paying attention and also making sure that you are protecting yourself financially. One of the things that I like to say is that 2023 is not the year for you to go out and finance a new truck, although you might want to look at new trucks out there. This is not the year for you to go out and finance a new truck. because this is the year for you to get financially smart. Start putting your money aside to protect you and potentially take advantage of opportunities that might come your way and work to build that financial education. That way, if you see an opportunity, you know how to capitalize on it. Let's talk about investing for cash flow, because unfortunately, there's a lot of, let's call it poo-poo information out there on the internet when it comes to the topic of cash flow investing, because a lot of people say, oh, if you want to get rich, just get this passive income, create this drop shipping site, start this Amazon store, create this ebook, and you're going to be making passive income, this cash flow. But the reality is, number one, that's not